Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading Corporation, and you are tuned into our podcast, The Secret War on Cash. And we say Secret War on Cash because it is, in fact, a war. We've been talking about this for over a decade now here at Swiss America, as we've been watching just some of the changes that have come through Washington, changes that have gone through our financial markets and our economy. And within the last 2 years, these changes have been amplified or magnified quite a bit. And as we get into our articles here today, one of the things that's kind of interesting is we just had an adjusted job report or payroll report come out from ADP. And the headline as it reads, ADP payrolls unexpectedly crater to a negative 32,000, which is the worst since March of 2023 and below all estimates. And Chris, I don't know what your thoughts on this are, but as I kind of read through this article, by the way, this is my co-host, Chris Agelastos, for those of you who are tuned in here for the first time. But they talk about how what ADP did here is they did what they refer to as re-benchmarking. So the numbers come out, then they re-benchmark them, and then they adjust it accordingly. And as I was and this is a very common thing. We've seen a lot of this. In fact, what was it? Shortly after Trump took office, there was the job report was like overstated by like 1 million jobs, if I remember correctly, somewhere in that ballpark.
Yeah.
And what as I was reading this, and we've seen this a lot over the years, especially the last couple of years, what I find interesting about it is that if there ever was a time in history where you would think it would be somewhat easier to get more reliable data, it'd be now.
Yeah.
I mean, this 30 years ago, this was happening the same way. That was kind of to be expected. I mean, computers were basically brand new back at that time, certainly not even close to the level they are now. But in today's day and age, to constantly be missing the mark like they are and having to come back in and readjust it, it just seems bizarre to me. And and I'll let you kind of explain this a little bit, but ADP's chief economist, Neela Richardson, she mentions the fact that companies right now are being very cautious in their hiring. And that's why we're seeing, these type of numbers come in through these reports. And, it's good that they are being cautious. And I think this speaks to, though, however, how complicated it can be for the average investor out there, because, we heard we had a strong second quarter here in our country in terms of the market and the economy, et cetera. But when you look at what's really taking place and you start seeing reports or numbers like this, and this is just one of several that we've kind of covered or talked about on these podcasts, how can we look at data like this and in the same breath or in the same vein be saying that, okay, the economy's good, the market looks strong? It doesn't make sense. It just doesn't seem to add up.
Well, I agree. And I trust these numbers a lot more than the regular official jobs report, because this is at least coming from ADP, which is a private payroll company,
Right.
who handles the payroll for a lot of companies, probably the majority of the companies in the United States. Whereas the numbers that come from the government, you're right, they are always skewed one way or the other, maybe depending on which way the current administration wants things to look or go. So, and it does make sense to me that we did lose 32,000 jobs in September, because we've talked about this before, but over the last several months, we're seeing a ton of people in the hospitality industry, restaurants, people eating out less. People are minding their money a lot better. And part of that is probably inflation. But as they talk about here, people that are job changers, as they call them, people that are, jumping ship and going to another company, they're actually getting about 6% less wage growth than people that are choosing to stay in their company. And a few years ago, that was completely opposite. People were told, if you want more money, you're going to have to probably leave your current company and go shop somewhere else. So there has been a definite change in the tide. And I think, people have been feeling it in their pocketbooks for a while, and the numbers in these reports haven't been supporting it until we see this number here. And I'm concerned, because you're right, the stock market, had a great quarter and is doing well, but there's a lot of people saying that that's in a bubble too. And so I am concerned that we're going to see some more, poor numbers, at least over the next 1 or 2 quarters, and maybe even some more interest rate cuts because of that.
Well, for sure, more interest rate cuts. Those are imminent. I mean, those are coming. Bottom line is, though, it's a very interesting choice of words you use, this bubble in terms of the market, because as we look here at the second article that our producer CC will put up here, we have DeSantis talking about exactly that there is a cause for concern, and Ron DeSantis out of Florida, he issued a stock bubble warning. And as you read through this, he's not the first to say this. There's certainly several who've said the same thing. But he talks about how what we see happening in our market right now is being driven off of speculation about future profits, where there is and I kind of reading between the lines, at least for me, what he's talking about is this disconnect, and this disconnect that we mentioned just a moment ago, where you have them saying that the market's strong, things are looking good, we're profitable, all these various things, but yet the underlying reality is that no, things aren't as good as what they're making it out to be. Now, the Mag 7, as they're calling it, the NVIDIA and what have you, the Google, et cetera, that they're doing well, but also their valuations are, and that's what's driving the market, incidentally.
Yeah.
And their valuations, as he refers to it, are extremely rich. And, so you look at this, and again, it can be confusing. A lot of people will be left to wonder or ask themselves, what is happening in the market? And the reason for those tuning in, like DeSantis is even weighing in on this, is because it's good. In fact, you would hope that, people like DeSantis and governors, et cetera, around the country would be weighing in on this, because they have state-run pensions and things of this nature where they have investments, and they need to be concerned because those monies, those returns that they're getting on retirement accounts and things of that nature, they are going to be affected if there is any kind of market correction. And he cites in here, and I think it's very wisely so, and again, we've talked about this, how Buffett and Berkshire Hathaway, because of what Warren Buffett thought or thinks is a very overvalued market, he's in literally a strict cash position right now, waiting for a correction, not wanting it, just waiting for a correction or an adjustment where there's value present once again in the marketplace before they re-enter into the marketplace. So, it is interesting. Like I say, you say a bubble, and the bubble that is being compared to what happened in the .com era, which I was here at Swiss at that time when the .coms were exploding, and you talk to investors, and all they wanted to talk about is how these tech companies were going to go. And you were looked upon as being a naysayer or a doom and gloomer if you even suggested that this .com frenzy wasn't going to continue into infinitum. And yet, lo and behold, look what happened. And I think it's a very valid concern that DeSantis is pointing out here, that this is a very similar bubble.
Yeah, it's got all of the same ingredients. And if you remember back to that time, which in a way it does seem like a million years ago, a time when the internet was brand new and the Wild West. And so all of a sudden, investors were excited about this new future and where the internet could take us. And that really fueled the .com bubble. You had people that had never even invested in the stock market before, all of a sudden getting stock tips, from their cab driver, and throwing their retirement plans into internet related tech stocks. And it worked for a while until it didn't work. And then, I knew, as I'm sure you did, a lot of people that lost, 50, 60, 70% of their savings overnight. And I think what people forget is that when you take such a big hit like that, if you lose 50% of your investment portfolio, it takes 100% return just to get back to even.
Right.
And people tend not to do that math
Well,
when they're
if it
making these choices.
if it even gets back to even, because understand,
Right.
again, during the dot-com era, these were companies that they were, we'll call them cutting edge because they were in some way, shape,
Mhm.
or form, but because there really was no substance to it, to the company, meaning they were dealing with intellectual property, they were dealing with
Mhm.
technology that if somebody else replaced that need, or there was an alternative to that need, then that was the other thing. I mean, so many people who lost a ton of money. Let's say, to your point, like they lost half of what they had in their .com, maybe more than that. Then
Mhm.
they were holding on to that. Well, I need to just get that money back. When in fact, there's nothing to say you're going to get it back, because if you look at like
Right.
the Mag 7 and these valuations, like DeSantis is mentioning, how much they are grossly overvalued, they may never in a million years see that valuation like we see it today.
Yeah, I think it was, I want to say Intel recently, in the last few weeks, I read an article that they are just finally getting back to the share price that they were about 20 years ago. And so that's a long time to sit in a stock, and at least that came back. But think about the money that an investor lost on opportunity cost from being stuck in this stock that wasn't going anywhere for the last 20 years, when they could have been in something else and grown their wealth 10 or 20 times during that time period. So it is, and I'm not telling people don't invest in the market, or that you shouldn't have investments there. I'm just saying, don't throw all your eggs in one basket. I mean, make sure you're properly diversified. Have some of those dollars in the tech world if you like it and understand it and want to play in that game. But don't have all of your money invested there. Be cautious. Look, Warren Buffett, I know some people might say he's just this old investor, but he's got a great track record, and he's not always going to hit the highest of highs, but he's going to have consistently great performance. And if he's being cautious, and now you have some of these state governments being cautious and just keeping an eye on things and making sure they're not too overexposed, I think the average investor should be doing the same thing.
Yeah. Well, he is old, he is wealthy, and he has been very successful. So
Yep,
there are worse people you could follow if you're looking to, take a page out of their book, if you will. So,
for sure.
all right, Chris. Well, thank you, and
Yep.
certainly something that we hope and hope and pray that we see some stronger numbers come out in the economy, and that disconnect become more of a connect. But
Yeah.
the way things are going right now, and that's, I think, one of the problems as well, is like there just doesn't seem like one hand knows what the other one's doing. And if that's the case, then how in the world do you get the train back on the tracks? So
Right.
for those of you tuning in, thanks for doing so. If you're not subscribed to this podcast, please do that, as we'd love to talk to you more in the future about this and other things. If you'd like some information about how to become better diversified, or learn a little more about the secret war on cash, as the title of our podcast is here, please feel free and contact us. You can call at 1-800-289-2646, or you can text that same number, 1-800-289-2646, or visit us online. www.swissamerica, which is all one word, swissamerica.com. So thanks for tuning in. We look forward to talking to you more in the future, and have a great rest of your day.
Take care.